First story, there's 24 billion reasons to be impressed. Story from This Is Money, the £24 billion bonanza. Britain's top banks are poised to reveal the biggest profits since the financial crisis. So Lloyds, Barclays, HSBC and RBS made a combined profit of £23.9 billion last year, an 85% year-on-year increase. The last time the big four lenders made more than 20 billion was 2007, not a harbinger of doom. And of course, the legal costs and PPI fines that have followed then have really hurt that. So what do we think about this one?
Hooray, the good times are back. Call off all this fintech nonsense. And
there are no clouds on the horizon at all.
I think greed is good again. Let's just go back to the heady days of banking, shall we?
Everything is
Well, awesome. I don't know. I mean, I think you need to put the numbers in context. The big banks are much better capitalized now. And so from a return on equity standpoint, I think the numbers are great, but are they really as great as they would have been in 2007?
An interesting point. You've got to bear in mind balance sheet, not just pure profit, exactly. Of course. Yeah. And I think also consider where we are in that the industry has moved on in those years. Yes, we've seen increasing competition in the marketplace, but I was with a bank CEO earlier, Tom, who was saying that the big four banks in the UK have got more accounts than ever. So is this just the return of the good times, or do you see real competition? I'm guessing you might say yes, but just
yeah, I think we'll see real change over the next 5 years or so. But I don't think any of the big banks are complacent by any means. I mean, they're all looking at the digital challenges and figuring out how they respond, which will be interesting to see.
Interesting to see for sure. Do you think this feature parity thing is going to be more of a trend? So we saw a lot of the banks starting to look at how do I start to do some of the features that you see with some of the challenger propositions and banks out there. Do you suspect we'll see more of that?
Oh, absolutely. I mean, I think the direction of travel is one way. Mm-hmm. The question is how quickly will they be able to execute, and will they be able to actually achieve that feature parity, or will the fintechs constantly stay ahead? Because if the fintechs can constantly stay ahead, then you have a chance of kind of keeping your customers. But I think if the big banks are starting to catch up, it does become a bit more challenging.
Yeah, you wonder if they're there's a phrase from ice hockey, you've got to skate where the puck is going. And I think they just sort of see what the current state is and say, that's our product roadmap for the next 3 years. But by that time, I think the puck sort of sails off into the distance. So I think there will be a fundamental change in banking business models over the next 3, 4, 5 years. What you've seen so far, fair to say, is relatively superficial change that's relatively easily copied, but I think that's starting to change.
I mean, I do think the narrative has moved on from, are the banks going to be the dumb pipes of the ecosystem? That was a conversation that people were really having about 5 years ago. And I think the answer to that today is no, they're going to try and fight. And so it will be interesting to watch it play out.
Yeah, I think the sort of argument against all of that is usually anywhere where it's sort of heavily commoditized requires very low operating costs to actually make that type of thing actually happen, which hasn't been the case in banking. So if you became just that dumb pipe, you'd never be able to actually make that model work at all, really. So, and we're seeing more and more people kind of come into the market at that back office space, not just from a, fintech to start with was very much about the veneer, it was either payments or it was like sexy stuff on top of other things. And now actually we're seeing it, not to your point, in fact to both your points, this is about agility in its true sense, not just sort of fancy post-it notes and whatnot, but being able to do things in 3 weeks or 6 weeks or whatever, to be in that situation where you're constantly moving where the puck is to keep keep everybody on their toes.
And the traditional business model, to your point, Tom, about the business model changing, was always about, can I cross-sell you and can I get you into the profitable products? What's my net interest margin, and how am I, how am I attracting that real sort of billions on the balance sheet, not hundreds of millions? When you say business model change, do you see that dynamic changing, or is that going to be the game, but how you play it changes?
I think this is something we've been saying for 3 or 4 years, and in fairness, haven't yet done it. But I think the change comes from cross-sell on one balance sheet to what people have called a hub and spoke model, or a sort of marketplace model, which hasn't happened yet. This idea that as a consumer, I think you want a single interface, a single place to see all of your money and to control it. But to get the best choice, the best service, the best price, often having dozens of different providers to provide those solutions that then aggregated around platforms. I think the internet's particularly good at providing these sort of aggregating platforms, and we haven't really seen it in finance yet. But I think that is a difference. I can't really see the point at which HSBC starts cross-selling a Barclays mortgage. It's always the HSBC mortgage. I think that is the
That's when the tipping point comes. It's interesting.
Yeah, I think it's about creating value for the customer. And I think the point at which we are at from an innovation perspective is I can aggregate your stuff together, come and have a look. But a lot of people say, well, I can just do that on my Excel spreadsheet. And there is real pushback as to whether it's creating value or not. I think that when we cross the barrier of really giving the customer value, so give you a concrete example in the pension space, it's great to be able to see your balance next to your current account, but can I somehow use that knowledge and that information to provide people with a better retirement? Because once you're providing a better retirement, it's way more useful than anything you can do on your own spreadsheet. Yeah. And I think that moving to that additional value add proposition is probably where the fintechs will lead. Yeah. And the question is, how quickly will the banks be able to follow?
It's like the so what. Like we've had account aggregation, but so what? I think we need that extra sort of value, whatever you want to call it, that really compelling reason that makes mainstream consumers go, that's what we were banging on about all this time.
I think that link between every day and the rest of my life is a really interesting place to play. Sort of what the common argument there's millennials spend too much on avocado and toast, so you end up with all these.
Oh my gosh!
Yeah, which is a pet peeve, but don't get me wrong. But there is something really interesting about that whole, so we were talking about this the other night with Marco from Solaris, which is that how do I start to think, what are the nudges, what are the defaults, what are the behavioral things I can do to help people think longer term every day? And everyday spend is a really interesting place to be in terms of awareness, but what else can I do besides making you aware and allowing you to track that guides you with gentle nudges? And you've always got that advice guidance barrier that becomes tricky, but that seems like an interesting space to come at it from both sides, really.
Yeah, I love this sort of long-term versus short-term kind of dichotomy that in January everyone signs up for a year-long gym subscription, but at 7 a.m. in the morning, how many people are actually dragging themselves out of bed? Giving people the tools to be sort of long-term sensible and rein in their short-term impulses, I think it's just fascinating.
Yes, I would love it if my app could help me maintain discipline, to be honest. Every morning when I cross by Pred and I think, am I going to get that coffee or am I not going to get that coffee? And if you can just do that mental calculation of how much it works out every single year, I think it really does stop you from going into the shop.
But I guess that's very similar to the banks sell products, and actually most of those products are in a minefield of how they actually make revenue. So the gym memberships are smart because if you sold it monthly, nobody'd have one by February, right? So from a banking context, then actually I'm not sure yet. Yes, I think we've seen many of the big banks kind of get fintech, as in understand some of the elements, understand some of the threats. But I still think they're using shapes and colors of yesteryear when it comes to business models. That doesn't actually relate to where things really need to go. We talk a lot about the difference between products and services. I don't think we're seeing anything from the big financial services companies that are actually services yet. And when we get there, I think it requires whole-scale new business models to really sort of work with that way.
Yeah, totally. It feels like the financial product is the center of gravity in the big banks. Everything else sort of orbits around the mortgage or the loan or the credit card. Whereas I think if the center of gravity is the human being and sort of solving problems for real people, then you can make sort of everything else has to shape itself to work for the human.
It's a different starting point, isn't it? It's interesting the design choices that you make when you're able to architect around those archetypes and their jobs. It does get interesting.
Architect around archetypes. That was
yeah.
You did well there, dude. That was impressive.
I mean, I'm half a beer in, so stick with me.
I know. I feel like I'm back now. I feel slightly like Popeye with a can of spinach. Like I've gone through a pint. I'm good to go. Let's go on to story number 2.
Let's Popeye it. Well, I was just going to say, I just want to throw in the Brexit dynamic before we do move on to the next story. Are there any is Brexit going to be, what are your perspective on Brexit and what this means for the UK banking sector? Do you have any thoughts there?
I mean, I think the vast majority of the UK banks serve the UK market. And so as long as you are protecting the domestic, offering, which I think you can do, I hope that the impact will be limited. I think the question comes in around the regulation and how much will it truly increase complexity for those institutions, because a lot of the times the barrier to innovation is all the other stuff that you have to do that's really complicated, but you have to do it because the regulator says so. And to the extent that, you know, Brexit makes you do a lot of really complicated things, it may hinder them from moving quickly.
Any thoughts, Tom?
I think the queue at the Irish regulator to get Irish licenses is very long at the moment.
I think that's a fair point. I'm going to move us to the next story.
I'm like imagining that like a queue at the post office or something. It's like you're waiting for your ticket to come up. That's nice. Like I think it's interesting. I think like the fintechs have got probably more to worry about Brexit than the big banks have, to a certain degree, because most of the big banks are kind of retreating. You know, they're on the defensive. They're kind of moving back to markets where they feel secure. Whereas most of the you know, the fintechs are actually in the the challenger banks like yourself, Tom, are in the space where you're going much more on the offensive, meaning actually not being able to passport out of here and all of the the sort of ambiguity that comes with Brexit is more of a challenge, I'd say.
I think that could be fair, yeah.